why do the residential?
Why do the residential? Because if my residential works at good case, which I'm pretty darn good at, then the yield is going to go much higher. But what I'm saying is, worst case scenario, the very worst that can happen happens, I lose 100% of the money in the flip business, which hasn't happened, thank God. But if it did, by having some of that money diversified to cash flow, I am still yielding that investor a return. On not just the money that's in the cash flow, but on 100% of the money that was invested to begin with.
So
is that powerful?
So the fix and flip is the residential and you're backing up with the commercial.
Correct.
Okay.
So that's the way that you invest through a portfolio strategy, okay? Now, in the beginning, when we're building a relationship with a client, we don't even go to private placements. We do a couple small flips, but we put our money up too. And the reason we do that is so that the investor feels comfortable. We do 1 or 2 flips, and that is it. From that point forward, we're talking about a portfolio investment. And notice how even if you invest with us now, you're noticing I'm telling you that already. That's why we educate our investors. We want them to know that there are opportunities that we invest in, but it has to be a balanced strategy. Lastly, 20%, which usually is going to be a minimum amount, is what we invest in what is called higher risk, high rewards. Non-performing notes is a great example of a higher risk, high reward. The project over there, $4.9 million, is worth 12. Definitely a higher risk because we have to foreclose and it takes time, but the reward is higher. So as long as you have a percentage that's kind of going in on big hits, that's a great opportunity. What you don't want to do is have 100% of your money there, because if it goes down and it busts, you lost it all. You guys with me?
Yes.
Now, with that said, there are so many opportunities right now in the higher risk, high reward category that what we try to do is, utilizing a syndication, which we'll talk more about later, we're able to use more of that money diversified from multiple investors to buy these kinds of projects because they are out there and they are incredibly lucrative. So again, you have to weigh in your strategy, but 40-40-20 plan is a good rule of thumb. You guys with me?